Welcome back, Alpha Hunters. So let's talk about what went on this week in the stock market. We'll look at the SPY, we'll look a little bit at the Qs, and then I'm gonna look at the crypto markets because apparently they drove a lot of action that happened earlier in the week. So I don't normally care to talk about crypto, but I'm gonna talk about it today just because it might be something that we need to focus on as it impacts the market, okay? So last week, I kind of said I didn't really see much of a point for the Fed to kind of come out this week on Wednesday and raise more than 50 basis points. I definitely didn't think that they would raise 100 basis points, but they wound up raising 75 basis points on Wednesday. So we kind of saw that in action. We saw this high doji candle come in on Wednesday. And basically it traded from the low to the high within about 30 minutes of each other after the Fed had made their announcement. So let's talk a little bit about why the Fed did that. So the reason why the Fed did that is because the market basically already priced in at least a 75 basis point increase. So the Fed, in my eyes, just kind of took it and said, okay, we'll just raise the market 75 basis points because they really kind of needed to when talking about inflation and the data that came out last Friday morning. That data was pretty bad. A lot of it was driven by high energy and high food costs. I did talk a little bit about last week that that's kind of some costs that they really can't control, but they do need to get demand spending down. So they were just going to raise rates a little bit quicker. And coming out of the Fed meeting on Wednesday, they did say 50 to 75 basis point increases going forward can be the norm. They did not commit to any particular number. They definitely did not commit to a 100 basis point increase at all, but they are waiting to see the data come in before they do make decisions, okay? So Monday was basically the day of the week. So I'm gonna go to an intraday candle and we can see this gap down from last Friday. And this was driven heavily by the way cryptocurrencies performed over the weekend. And obviously Bitcoin being the big one, that's the one we will look at here a little bit later. But it just opened down and it just traded lower for Monday, most of Tuesday. We didn't really trade down too hard on Tuesday. It was just kind of more flat to a little down. And then Wednesday happened, and then you can obviously see where the Fed meeting took place. So right here on this 15-minute candle, this is where the announcement came out for a 75 basis point increase. And then this long bar green candle, this is when the Fed was doing its press conference. Jerome Powell was doing his press conference. And so you can see pretty much from the low to the high, almost 30 minutes. We did get a little higher towards the end of the day that day. And then we had a little bit of a sell off. Pretty much the last 30 minutes or so of that day, we did sell down pretty good. And then Thursday morning opened down surprisingly. I was kind of shocked about this. Basically, futures just rolled down all night into the open. But we didn't trade much more below that the rest of the day. We kind of just opened down, traded down from about the first hour, but we pretty much just stayed right around that area. Then the rest of the day, Thursday and Friday. So obviously the big news was coming out the 75 basis points from the Fed, okay? So now that we know that, we see what the market has done. The market got what it wanted. It wanted a 75 basis point increase. It got the 75 basis point increase. They're taking the Fed a little bit more seriously about how the Fed plans to deal with inflation, which, yeah, obviously they need to. A lot of working people, are more impacted by the rise in gas prices and food prices rather than the declines in the stock market. So I am glad to see them taking more aggressive stance than what they have kind of communicated before in the past. But what does this mean kind of for the market? Well, I'm going to go ahead and update some things. So I'm going to take off this target and I'm going to adjust this box. So I'll leave the box there. Now, many of you know I was looking for a push back up into the zone so I can get bearish at that level because I thought that would have been a prime level to get bearish on. I don't know if we get back to that level. If we do, I'll definitely be getting bearish, but I'm going to adjust this box here in just a sec. But we're going to zoom out here. We'll go to a weekly chart on the SPY, and we're going to look at some long-term information just to kind of get a clear picture of what I've been looking for, right? So we know this is going to be a huge, huge, huge buy zone down here. This is where the long-term exponential trend line is, roughly, down in this zone. And pretty much anything in between that orange box to this area is no man's land, okay? So I'll put another box in here. So this red box is really just meant to indicate this is like no man's land. I really didn't have any direction I cared to be in this zone, which is why back here I wasn't really wanting to be bearish, as it was the first time we really kind of got down into that zone. I was like, first time in the zone, I'm going to look to be a little bit bullish. I thought we'd push up a little bit higher, but we obviously didn't. Now, I'm going to take this box and I'm going to make it about the size of really most of this, okay? If we get anywhere back up into that zone or so, let me go to a daily picture real quick, just kind of see what things kind of lie out. So I would lower this a little bit. I think that's a little bit more of the no man's land area. And right there, I believe if we fill this gap, this open gap we have right here on this daily, which is from last Thursday, the 9th of June, to the open of Friday, the 10th of June, that would be a pretty good spot to, I think, get bearish. So if we do fill that gap, which is why I do have this range here. Now, I could definitely see it to where we do push up kind of strong. Maybe we get back above this level, which if we do get back above this level, we could also then push up to this 430 area. And we could potentially get back up to that zone that I previously had with the smaller box. But I don't know, it's a little bit of a stretch to me now, okay? Especially with the breakdown that we've had over the past week and a half. Okay, so back to the weekly candle. This was no doubt a hugely bearish breakdown that we saw with this evening star reversal, and we just kind of continued on with that this week. But I'm going to adjust these two lines because really we've already filled this gap that we've had on here from April of 2021. And I'm going to take this top line and I'm just going to move it to the top of this evening star reversal, because that will be a very important point. If we do get above that, expect the market to go higher. I think though the next time we get probably back up into the 430 area will be the next time we're in a bullish market trend, okay? I don't know if we get back up to that in a retest or a bear market rally, but let's go ahead and look at that real quick, okay? So if we do get a bear market rally, when do we think it could be? Well, if we look at the Qs, they actually held up decently well today, okay? So this is how the Qs look, and I would definitely be looking for them to pull all the way back to their pre-pandemic high, which is roughly around the 240 area, 237.50 or so. But today, what we saw with the Qs compared to the SPY is the Qs did not break down below Thursday, okay? Which is kind of important because that usually signifies the end of a trend, okay? The Qs usually always lead the next move, all right? That's just the way it is, right? The Qs were up today 1.22% and the SPY was actually down 0.22%. So with that information, do we expect a short-term rally here on the market? We could definitely see that. We could definitely see that happen, okay? Does it happen probably this next week? You know what? If it's going to happen, it's going to be relatively soon, and it's going to be pretty strong in my guess. I would look for the push-up, and potentially as it starts to flatten out, that's when I would start to look to maybe pick up some bearish positions if you're going to try and protect your portfolio from an eventual rollover again. But how far could we go up? Well, to be pretty honest, we could actually go pretty deep. Because as I was looking at this kind of analysis that I have been showing off a lot over the past few months, and I did update this latest trend to incorporate the latest low that we put in today and that price level to get an understanding of where we could get back to. So if we do get back to 400, well, that would be roughly a 38% retracement. That is a pretty low amount on a bullish retracement that we haven't seen before, really ever, except for like in the financial crash. And that was kind of towards the end of the financial crash. So if we do get to 400, that would only be about a 38% retracement. So if we got to like 420, that would be roughly a 58% retracement, which, okay, that's not too bad, all right? If we got to 430, that would be a 68% retracement, which is a little bit more in line with what we would expect, okay? So 430, and if we did get back to within 10% of the all-time highs, which, you know, anything over 432 is within that 10% number, that'd be roughly a 71% retracement. So we can see that that is definitely within reach as potentially the market maybe has bottomed here on the near term, and looks to maybe start a bear market rally. But don't forget how aggressive that these can be, and don't just look for maybe a 5 or 10% move up before you get short, because one thing that you saw all week, if you paid attention to any kind of financial news or financial channels or TV or anything like that, is you started to see and hear a lot of bear market. We are officially in a bear market. So this is something that they really kind of try to push the market into certain zones or certain narratives so that they can get the media to talk about them. So be very careful about where you are trying to get short. I think the first most likely spot to potentially get short would be on this gap fill. So somewhere around the 401 point area on the SPY, that would be a zone. And then potentially anything around the 415 to 420 area, it could be a spot. And then anything around the 430 to 433 area could be another really good spot, okay? And if you are going to do something like that, go out with plenty of time, okay? Plenty of time. Go out a year longer on put options if you are going to look to do anything like that. But as far as like my plan, my strategy, I'm definitely not looking for anything like that. I'm looking for just a wait right now, as we are just in this red zone. I have no takes. I'm just stopping. And if we just keep going down, you know, this is gonna be the buy zone. Anything down here, which is anything under 343, with the pre-pandemic all-time high being around this line, which is around 339. So if we look also at some few other things, let's just look at a few other things around the market. So we know how good the Qs did today, so that could definitely start to lead us in a bear market rally here. So how bad did some other areas of the market perform? Well, if we look at energy, look at energy. Energy's been the one that's really been kind of carrying the market over the course of this year, and over the past week and a half, it sold off very hard. So you could start to see some areas where energy could possibly be turning as maybe commodity prices start to come down. So maybe we'll get some relief on oil prices. Maybe we'll start to see some relief on gas prices, because the market moves first, okay? So that'll be something to kind of pay attention to going forward. The other areas was, you know, the financial areas. Over the past week and a half, they performed horribly. So they started really selling off at the market last week and early into this week, but they kind of bottomed out. They didn't really make a new low today, kind of like the Qs did. So it'd be kind of interesting. Now, they didn't perform nearly as good as the Qs did, but it's just kind of interesting to note that. Some of the other areas like industrials, they've also been performing pretty badly over the past week and a half. But really, I think it's energy. Energy really started to take a turn, while tech started to really do pretty good, or especially over the past 4 or 5 days. So we could start to see a rotation into tech and other areas like that. And here is something I'm gonna say before we get into crypto here in just a second. The thing about some of these tech names is they are starting to be a lot more attractive. Now, I'm not talking about big tech. I'm talking about tech companies that are new and up-and-comers, those that can potentially be game changers into the future and going forward. And I'm talking like quantum computing, AI, and a lot of those areas. If you have list of stocks that you are potentially wanting to buy, here's the thing. In this next bear market rally, start to pay attention to the way those stocks perform. And I'm talking stocks that have been beaten up and are down 80% or more from their all-time highs, okay? Whenever we do get a significant bear market rally, pay attention to the way they perform, and then the next time the market sells off. Because a lot of those companies, a lot of those stocks are not gonna break down that much anymore. A lot of them have already sold off so much that it doesn't make sense for them to sell off as much anymore, okay? So if you take like a company like AI, for example, you see how it's starting to kind of perform ahead of the market. It hasn't broken down since, what is that, May the 12th, okay? So a company like AI and other companies like this, they are no longer gonna start to break down. These companies are gonna start to be the bargains going forward into the next bull market. So start to get your list out, start to pay attention to the way these companies and their stocks perform, because this is gonna be the next bull market, these next stocks that lead us in a bull market. Really pay attention here. This is going to be your next money make type of opportunity, but this is just one stock of dozens that are probably out there that are going to be tremendous opportunities, okay? So if we just look at AI here for a sec, AI from its all-time high is down roughly 91% currently. It got down to 92.5% down from its all-time high. This is what you are looking for. Companies that have been discounted so much and their stock prices have fallen so far that they start to become, you know what, a shot in the moon type of bargain. Maybe they don't make the next big thing, but you know what? It's much harder to go to 0 than it is to 100 for any kind of stock. So really and seriously, start to look out for some stocks like this, those that have been beaten up 80% or more, and they are no longer making new lows, okay? The companies that are gonna continue to make new lows in this marketplace are gonna be your traditional big tech type companies because they weigh so much on the marketplace and they haven't sold off nearly as much, okay? They have been the darlings and the everything of pretty much Wall Street for almost a past 2 decades. So those are the ones you want to stay away from. Your Apples, your Amazons, your Meta, your old Facebook, the old FB and now Meta, your old Microsofts. I do like Microsoft a lot just because they are in a lot of the futuristic type areas, but those companies you want to stay away from as they can't continue to grow as fast as they have before. So if we do look at Amazon, okay, I'm going to go back to the tech bubble on a monthly chart. And what we can see here on Amazon is it came down an entire 95% from its all-time high pre-tech bubble. It came down 95%. It went from a $5, what is this, roughly a $5.60 stock down to roughly 28 cents. Yeah, that's the kind of opportunities that we're looking for going into the future, okay? And if you could imagine buying Amazon at 28 cents and it's currently at 106, yeah, that's pretty significant gains, okay? So this is what we're kind of looking for as we go into the future. Start to look for those stocks that have been beaten up a lot, and they are no longer making bottoms, okay? They no longer continue to fall. Those are going to be the ones that Wall Street starts to move into, so really pay attention to there, okay? So let's talk about some crypto just for a little bit. Now, I don't care to talk crypto much. I don't want to cover crypto so much on this channel. There will be some times that we maybe talk some crypto, and this is going to be one of them, okay? Crypto is performing very poorly, okay? So if you do follow crypto, basically probably already know this. And one of the issues that crypto kind of has is nobody kind of knows what it is still. Unfortunately, it hasn't really proven its case point yet, okay? I think that time we will see it sometime over the next 2 years if it holds on. But if we look at this long-term chart on a monthly, we can see that it has an exponential trend line coming up right here. 3 months ago, it broke through that back in April. So about 2 months ago. The previous times it had broke through that was in this zone back in 2020. And it rapidly got back above it. We have now seen it close under that exponential trend line April, May, and we have continued to break down here in June. I do not think June will see a strong enough rally to push it back over that trend line, as they would have to get over roughly 50,000. So for Bitcoin, it's at a place of uncharted territory, okay? So it broke this trend line, and really I can expect to see it probably pull under 10,000. And I know a lot of people are like, no way, because they have a lot of money tied up in crypto. But if you look at how much some of these pullbacks were, this is an 87% pullback right there. And then this pullback was roughly 84%, 85%, 84%. So how much could this pullback be? Well, if we go from the all-time highs back down to roughly 83, 85%, it's around 10,000. Okay, it's a little bit over 10,000. That's the 85% level right there. It's a little bit over 10,000. So I could see cryptocurrencies pulling back even more. and Bitcoin to get under 10,000. Does it stay under 10,000? I don't know. But the other issue that it has on a technical level is it's breaking this trend line. So since it's breaking this trend line, it's now going to set up a new long-term exponential type trend line level. And so who knows where this thing kind of settles in at. It might get under 6,000. But the thing I'm going to say is, if it can hold on, and really what it needs is for the market, the world to just forget about it. Okay, it needs to just find a zone and just settle in. The world forget about it. Everybody just meme on it and say, yeah, you remember that time where we thought Bitcoin was going to be something? You know, that's what it needs. It needs to just be forgotten about and then let it figure out what it's supposed to be. I know a lot of people used to talk about cryptocurrencies and Bitcoin as an inflation hedge, and to me that was never actually correct. What Bitcoin is, it's a fiat currency devaluation hedge, okay? So, and really you can see that here lately as we've seen inflation increase, which means they have to strengthen the currencies to combat inflation. That has been something that's very bad for cryptocurrencies, okay? Now, I think cryptocurrencies can get back to going, but it's going to take a while. They just need that flush out moment. They need it to just kind of clear out and just get down to a level and just start chopping around. If it gets under 10,000, I'd probably say maybe start dipping into it. If it gets under 5,000, you know what? I think that's not bad. But what it really needs is just to get into some level and just kind of chop around and form a new base, a new pattern, and that kind of thing. But this is going to be another area that just kind of needs to be paid attention to, as it has impacted the stock market. But that'll pretty much do it for me. So what I'm really looking for is this zone that we're currently in. I got nothing. If we get back into this yellow box area, then I'm definitely going to be looking for more of the bullish play. If we get above that yellow box, I don't think we get too far up into this yellow box. Maybe we do get up to this previous zone that I was looking for, this 430 area. But I don't think we'll get back above that. If we do get back above that, I think it'll be in the future as we are in another bull market. If we do get back in this zone though, I'd be looking for the protection play as you want to buy some protective put options. And anything down in this green zone, this is going to start to be your long-term buys. It's going to be really tough to kind of trade in here. It's going to be kind of wonky because it's going to be up one day, down another. It's going to be people trying to sell still for whatever reason. But a lot of people are going to be in here long-term buying in this zone. So do not try to be super bearish at those levels. But that is kind of what I'm looking for. Right now, we're just in no man's land, and I'm not looking for anything currently. Okay? Alrighty. Take care, Alpha Hunters.